After stabilizing Nigeria's banking sector, the Asset Management Corporation of Nigeria is now focused on raising the funds to redeem 5.7 trillion naira bonds. AMCON hopes to make recoveries from the bad loans it purchased from banks. However, AMCON wouldn't do it alone. Part of AMCON's refinance plan is a sinking fund set up by the banks to pay for the bailout. The central bank has committed to contribute 50 billion naira a year to this fund, while the banks have agreed to provide 0.5% of their total assets every year over 10 years.
Over the long run, the sinking fund will be responsible for about 66% of all the payments of the bonds. So the sinking fund was always going to be the biggest contributor to the repayment of the bonds. The balance of 34% was going to be built on recoveries, asset disposals, reinvestments, and stuff like that. But as the nature of the sinking fund is going to grow over time, so with this first refinancing we're doing, the sinking fund is going to contribute probably about 30% to the refinancing, to the 2 trillion that we're refinancing, and the rest will be through recoveries and asset disposals.
A key part of AMCON's internal recovery strategy is the sale of 3 banks. The former AfriBank, Spring Bank, and Bank PHB failed to recapitalize ahead of a central bank deadline in 2010. Subsequently, AMCON became the only shareholder in new banks created after the assets and liabilities of these lenders were transferred to 3 new institutions: MAINSTREET, Enterprise, and Keystone Banks.
When the CBN actually seized the licenses of those 3 banks, as they were, because they were insolvent, what the NDIC did was to create bridge banks from those existing banks. And of course, it was at that point that AMCON then, of course, came in to the picture. And of course, this, again, it's one of the major primary responsibilities of AMCON to be able to resolve such incidences. And that's why you find today that those banks are now wholly owned by AMCON. And that's why I typically say that AMCON, to a very large extent, has actually been able to deliver on its assignments.
AMCON has announced plans to start selling its assets in the 3 banks, starting with the former Spring Bank, now known as Enterprise Bank.
You know, in 2005, there was a consolidation in the Nigerian banking industry, and 6 banks came together: Trans International Bank, Fountain Trust Bank, Omega Bank, African Continental Bank, Citizen Bank, and Guardian Trust Bank. They came together to form what was known as Spring Bank PLC.
Enterprise Bank, which in my own view has the least value. Either you look at it from the perspective of the size of that bank, or you look at it from the perspective of the brand, which of course currently in the market now, they're beginning to rebrand that bank. The current management is doing all it takes to be able to reposition that bank again to play at least the SME space, which I think is a very, very good strategy. But of course, in terms of the value, on the surface of it, I would say Enterprise Bank has the least value. And of course, the major attraction for anybody coming into Enterprise Bank would just be to play that SME space, which the current management is trying to build.
We'll now reach out to investors who are interested. We'll qualify them, and the ones that are qualified, basically, is a number of qualifications. Can you actually buy the bank? Can you actually run the bank? Will CBN allow you to own a bank? When all of that is completed, then we'll allow them, of course, access to the data rooms, and so they can do their due diligence. And then after that process comes, we'll give them a time. Then we'll we'll evaluate all the bids, and then we'll decide who is the best suited in terms of a business plan, pricing, continuity of the staff, and all those other things we'll give some weighting to. And we'll disclose all of that before in the process, so people will know what they're actually getting themselves into.
Okay.
We're interested in the highest price, but we're also interested in the highest responsible price.
Right.
Which means character, continuity, ability, all of those things.
We do know that at a certain point in time, AMCON must realize their investment, because this is just an investment, you know. So what is important for us is to create value. What is important for us is to reposition the bank as a retail bank. So we've invested heavily in technology. We've invested heavily in staff development. And we've also invested heavily in creating alternative channels, because, you know, the industry is now shifting from the traditional people coming to the banking hall to other channels of delivery. So our target is to run a highly efficient and technologically driven institution.
AMCON's divestment from Enterprise Bank is expected to start a new wave of mergers and acquisitions in Nigeria's banking sector after deals were completed in 2011. The sale of Enterprise Bank will be followed sequentially by that of MAINSTREET and Keystone Banks. Beyond that, Keystone Bank, before now, which like I said, we still have to mention that bank given the fact that that is like the heritage of the current Keystone Bank. Bank PHB used to be a very, very innovative bank. They've got very, very good technology. They've got a very, very youthful staff and of course even customer base. And one important thing that you must realize is the fact that a youthful customer base presents a growth opportunity for a bank, because as the customers grow, the bank of course grows along with the customers. And in terms of the deposit, you can easily see that in terms of the deposit base and of course in terms of even their earnings potential. And that's why for me, Keystone Bank offers the best value. Philip Ikeazo, CEO of Keystone Bank, was unavailable to be interviewed for this program. However, he provided a statement about the bank's performance. According to Ikeazo, Keystone Bank recorded a positive income of 6.4 billion naira in 2012, compared to a loss of 11 billion naira in 2011, as our risk assets grew 41%. Concerning the former bank PHB, Ikeazo said, Bank PHB had a retail and commercial banking friendly brand with over 200 branch outlets, over 2.5 million customers, and supporting infrastructure. The last bank to be sold by AMCON is MAINSTREET Bank. AfriBank typically used to be known for government businesses, and I think till date MAINSTREET Bank still has a very good hold on some government businesses. So for a bank, for instance, that might be looking into maybe government businesses, MAINSTREET Bank might be an attraction. But I actually think that government businesses may not be the way to go, particularly now that government is looking at a private sector-led economy. And of course, you know the volatility of the government businesses, particularly in the case, the experience that we had in 2007, 2008. And that's why for me, the value in MAINSTREET Bank, for instance, is less than the value that you get from Keystone Bank.
The strategic trust is really more to focus on the retail segment of the business. And why is this so? We have 220 branches. The strength of the old bank, of the legacy bank, is really to also leverage on this. And the bank used to be very strong in the collection business, in the retail business, and we say, okay, fine, let us focus on this. And that was the decision of the board. And speaking to this is, what are the things that we need to do? We need technology. Technology is an enabler of the business. AMCON expects to conclude the sale of all three banks by the third quarter of 2014.
The banks are all profitable. They have clean balance sheets and they have adequate liquidity. They have some challenges, obviously, because when you go through that kind of trauma, you have to get back the confidence of the depositors, mostly, confidence and morale of the staff, and they have to also get business going. So they've been working at it. Keystone Bank was interrupted because there was a change in leadership at Keystone Bank. But the other banks, I think, are well, they're healthy banks and they're well on their way to recovery and being very competitive. You have to overlay that with the policy that Nigeria already has an explicit policy of not owning banks. So our intervention was always going to be temporary, and we think that the time has started. I think that the timing is right now to divest from these banks, and also because it will not have a negative effect on the financial system at this point.
There's a rich appetite for fresh investment in Nigeria's banking sector. Indeed, AMCON says it has received 20 unsolicited bids for its three banks. It's however not willing to provide information on the bidders. But South Africa's First Rand, after acquiring a merchant banking license last year, says it is interested in MAINSTREET and Keystone Banks. The central bank will play a key role in any transaction, as it must approve any deal.
Well, we have set very clear rules around these sales, and we applied them in the last round. We would allow the boards and AMCON as shareholder to decide who they want to go with, subject to a number of conditions. First of all, we're not just interested in people who are going to bring in money. We want to make sure that those who take over these banks are able to provide the right governance and risk management and stability. That's extremely important. So it's not just about money. The second thing is we would look at the size of the institutions. So we would not want a bank, for example, to grow to more than 20% of the industry. So there's something like a limit of concentration that would allow. So we'll not allow a bank like First Bank to come and acquire 3 of these banks. It simply will not happen because it would just be too big to fail.
The tough task to keep down the cost of Nigeria's bank bailout through the government continues. Traders say AMCON's refinancing plan is an orderly solution that, if executed as intended, will have a moderate impact on the broader financial markets. Selling 3 banks by the third quarter of next year is a major part of AMCON's funding plan, with implications for the bank's key stakeholders. Wale Famrewa, CNBC Africa, Lagos.